for that. We have Sanjay Parekh now joining us. He's founder and CIO at Sohum Asset Managers. Sanjay, it's always a pleasure having you with us here. Thank you very much for your time. We get these sort of dips once in a while, and today, arguably, of course, because the dips are short-lived and shallow, it's a slightly larger dip, right? 1% or so. Just your thoughts, Sanjay, because the accepted and what the wisdom which has worked is just buy the dips, right? Use it to buy stocks that you like.
Yeah.
Any sort of rethink there? There have been many, especially on the technical side, who pointed out that maybe in the next 1-2 months, we are perhaps in for a bit of a sideways, maybe even slightly down kind of market. Do you agree with that? It's very near term, I know, but just your thoughts to begin this chat.
No, Prashant, I totally agree. So I think we all know the fundamentals are great. You all had a session recently, which I attended, and, the big story for India is very, very good. All the balance sheets are firing. But what is constraining everyone is valuation. And hence, certainly, to look for stocks where there are clear, attractive opportunities on a bottom-up, be it large cap or mid cap, they are selective. So, of course, all sane investors would want to buy at a good value. And that is where, selectively, wherever there are opportunities or pockets or mispricing is there, at least we are looking at, purely from a stock perspective. Clearly, as you said, it is a bottom-up buy on decline because, you just look at 3 to 5% lower and it looks very reasonable then. I mean, if the expectation of return is reasonable. So that is where we are placed. So that's why I think it will be more of sideways for a while. We have events ahead like, which is all in the price, according to me, of a continuity in the government. And then we have monsoons, which is very important. And I think it would be volatile in the interim, but broadly, I think markets will want to look for these things before it takes the move for the next, which is very healthy, actually. That if market remains in a narrow band, and then we take up as we look ahead on these elections and monsoons, and then we look for 26, where we again have a good upside.
All right. Hi, Sanjay. Good to see you. And as always, we were just discussing with Nilesh as well as Prakash on the entire telecom industry, because we have idea that's come in there. They are saying that, they're going to do an FPO and they could come out with the required money. Now, you all are relatively overweight on telecom in comparison to what the benchmark has. I think you have Indus in there. You're playing Bharti via both the instruments. Yes. Are you all factoring in a 3-player or are you all factoring in 2 players? I mean, and what about the tariff hikes? The ARPU hike has been spoken about for long. Now it appears like, it's almost certain it comes, if it has to, post the elections. So your view on the telecom space and what are you all factoring in?
Yeah, Nigel, so as you rightly said, we have almost 7% weight. Bharti has been structurally overweight for us now for 18-20 months. Last month, I added Indus, and overall weight is higher. And we believe, actually, if there's a 3-player market, it is good. Because, eventually, economics has to prevail and there has to be price hikes. Government also is quite supportive of this. They've been vocal that we need a third active player, not a weak third player. And, hopefully after the elections, we need not 1, but maybe 2 price hikes, not immediately, but over a period of after elections, maybe 12 to 18 months. So that would make the economics and ROEs look better for all 3. And I think the overall growth, as Nilesh Bhai recently also said, with 19 GB consumption, with digitalization, the pricing power, everything on affordability, we have aspirations. So affordability is not an issue if somebody were to pay from 200 rupees ARPU to 240 rupees ARPU. I don't think the demand is going to significantly get affected. So I think it's important. In fact, if there is a third player, it will be better because one may look at competitive on a narrow angle, but on a longer term perspective, you get pricing power, you have more discipline. hopefully, after the elections, and that will actually help. There is enough growth headroom. So I think that is how we think about it. And we don't think from a myopic angle that if Vodafone gets that's the equity, it will impact Bharti because pricing power will be positive for even them as well.
Okay, just to give some context to the flashes at the bottom of your screen, and we'll try and get both TIMSI and tax experts to interpret this. It all rests on this whole issue of the amendment of the India-Mauritius Treaty. It's all boiling down to one question, and that is whether investments that were made prior to 31st of March 2017, whether they will now also be subject to capital gains tax or not. And that's where the debate lies. Now, some of the sources that TIMSI is speaking to in North Block, in the government, they seem to be indicating that this is not technically retrospective because the tax is levied at the time of sale. That is when you have a capital gain, and that therefore that's the interpretation that perhaps the tax can be applied. However, the contention that the tax fraternity is making and a lot of investors have been making is that in the earlier amendment, grandfathering was promised to all investments, all FPI investments coming in, FDI, FPI investments coming into the country from Mauritius up until 31st of March 2017. So the biggest question to sort of, distill this down is whether the old investments still are grandfathered or whether capital gains tax will have to be paid if those investors are exiting now. And folks, when my reading is that I think this has become a very hot contentious issue now, looking at the spate of block trades that we're seeing, the whole huge action in the market where there are a lot of PE exits, a lot of funds have been exiting their positions and they've made handsome gains. So I think it's going to boil down to whether those exits will now be subject to capital gains tax after this amendment comes into effect.
We'll wait for, let's have Dinesh Kanabar and others join us once again because, this is not a good look. If this is what, as Surabhi is pointing out, if this is what this means, then it certainly is not something which many have been expecting. As we had Nilesh Shah earlier of Kotak AMC. I mean, the general almost understanding is that they'll clarify. I mean, there's no question of anything doing anything in a retrospective way. But if this is the interpretation, then I think we'll need to get more perspective in terms of what the impact, etc., is looking like. So more on this kind of as we go along. The market's down another a little bit more, actually 230 points. We've been down 190, 195. So maybe a little bit more here is what we've seen as far as pressure is concerned. Sanjay, any other sort of ideas, themes, etc., that you're looking at right now?
Yeah, so as I said, we increased our weight on the beneficiary like Indus Tower last month. And also we added metals in our portfolio because we believe there could be an opportunity there. So that's where we've had, and we've booked some profits, raised our cash in oil and gas space in the PSUs which held. We booked profits there and raised our cash to 7.5.
Okay. Just to sort of, talk about the big themes, Sanjay, from here on, anything fresh that's come onto your radar? Though, of course, markets at all-time highs. I guess not easy to get fresh ideas. But in case there's something else that you are now researching, looking at.
Yeah, no, so it's very important. So we're meeting a lot of mid-cap and small-cap companies across the board. So it is, a diagnostic company. It could be a capital goods company. It could be an SME financer, housing finance. And over the last few days, we met almost across a specialty chemical company, a leader in specialty chemical. And what is coming out is that they are absolutely gung-ho broadly across the board. I mean, you'd want to buy most of them actually. But the problem in a lot of them is valuation. So I think the good picture is that, the breadth, and I said is across businesses. And the fundamentals, their approach, their scalability of a 3 to 5 year view that they have, the balance sheet is in place. It makes you very, very positive. But only thing is, the valuation. So, what we're doing is we just meeting all of them, waiting for a right entry point, keeping our things ready. and at the right point, entry point, when the price is comfortable, would buy. That's our strategy. Overall sector, we've taken a big underweight call on IT, on FMCG and oil and gas. And by and large, it has worked for us. That's the way. Other domestic themes, we are positive, and we continue to remain.
Got it. Sanjay, we'll leave it there for today. Thank you very much for joining us. Appreciate it, as always. Have a good weekend. We'll see you back soon. We have Pranav.
Thank you for watching CNBC TV 18. For all our top stories and news updates, follow us on our social media platforms.